and maybe good evening to you, ladies and gentlemen. My name is Maruf Zghaib. I'll be the facilitator, the speaker in this upcoming 1-hour webinar under the topic of 6 dimensions of effective accounting and finance teams. As a test, I would like you to type something just to make sure that you are hearing the launch of this webinar. Okay, so Maruf and Ahmad are confirming that the sound is good. So you're all welcome in this webinar. Probably you are wondering what the 6 dimensions of effective and accounting and finance teams represent. You know that managing the accounting and finance department requires building on various dimensions to keep the balance between growth and performance. Today, accounting and finance teams are struggling to operate at full potential because either targets and measures are not clear, or the team is not cohesive enough, or the tasks are not well identified, innovation is not well used, and cost reduction is not achieved. The 6 dimensions of effective accounting and finance teams present a dynamic and modern approach to manage the accounting and finance function on a tactical and strategical level beyond the technical day-to-day skills. We know that our accountants know how to do the debit and credit. We know that our accountants do the reconciliations. We know that they know how to file the documents. However, we need to make sure that the team is working at full potential. 6 dimensions. Why is it 6 dimensions? In our 6 dimensions, we will focus on several areas of the accounting and finance team. One is about setting key performance indicator measures. The key performance indicators is a measurement system which serves as a cornerstone to manage the performance of the accounting and finance team and other functions within the entity. So that's the first that accounting and finance people must focus on, which we'll elaborate on at a later stage. The second dimension is building the team's capabilities. We have the team. We need to make sure that this team is well trained. We need to make sure that this team is spreading the knowledge in the right way to the right people. We need to make sure that the team is happy, well motivated, and going at full potential towards the targets and objectives. Dimension number 3 is about accounting and finance process reengineering. Accounting and finance is all about processes. Are our processes standardized? Are our processes documented? Are our processes fat-free? We will learn how to create processes, how to re-engineer those processes so that we reduce cycle times, to reduce waste in the accounting and finance. Dimension 4 is about using innovation in accounting and finance. We hear about ERPs left, right, and center. We need to see how to implement an innovation project. The software is there, the ERP is there, but how to implement the innovation project in a project management scope. Dimension 5 is about stakeholder satisfaction, internal and external. The accounting and finance team works daily with people inside of the company and outside. You work with the employees in order to collect from them the timesheets, gather the expense reports, record the expense reports, pay the payroll, provide them with loans, collect the loans from them. You work with external parties. You work with banks, with auditors, with regulators, tax authorities. You work with investors. All of this time of working with those people, we need to ask them, are you satisfied? Are we giving you what you need? Are we giving you what you need on time? Is the level of details representative of what you are looking for? That's the 5th dimension that we will focus on. And the 6th dimension is achieving realistic cost savings. If you look at this model, the base is having a strong team. When you look at this model, people usually think that we read the model from up to down. People think that our main goal is to achieve financial savings and then to go towards the team. But in the 6 dimensions, we will see that no. In the 6 dimensions, we will see that the base is basically the employees. This is the base. If I have employees, if I have people in our team that are well qualified, well trained, and well motivated, the people can achieve everything else up on the ladder. We need to recruit the good people. We need to train them. We need to keep them motivated so that they achieve proper processes and abide by the processes, so that they try to achieve innovation, so that they keep our internal and external stakeholders satisfied, and at the end, money would come. It doesn't start with the money. Money is the end result. Money is the end result of having a proper team, of having proper processes, using proper ERPs, having satisfied stakeholders, and then money would come. Let's start with the first dimension, which is setting KPIs. Does anyone of you know what a KPI is? What does KPI stand for? Can anyone compute? KPIs. What do KPIs stand for? The word KPI. Key performance indicators. Exactly, Abdullah. Abdullah is saying that KPIs are key performance indicators. So what do KPIs help us? KPIs are usually measures, right? So KPIs are measures in order to verify if we are reaching targets or if our performance is on track or not. Peter Drucker mentions what gets measured gets done. If there's something which is not measured, maybe it will not be done, or will not make sure whether it was done in the right way or not. The word key stands for vital. You don't have to measure everything. When companies set KPIs, they usually have, maybe they might tend to set measures or indicators for things that are not key. The rule number one is setting KPIs, you need to measure what matters. Two, you are measuring a performance. You are measuring things and their performance. That's step number two. Three, you need to set the right unit of measure. In our 6 dimensions, we will learn on how to prepare proper KPIs, designing a proper KPI measurement system. To design a proper KPI measurement system, one, every KPI must lead to a key result area. This key performance indicator is of measure to make sure whether we are moving toward a specific key result area or not. Profitability is a key result area. Customer service is a key result area. Innovation is a key result area. Okay, so one, we need to make sure whether we are moving towards a key result area or not. They must support the right behavior. We want the KPIs to support ethics. We want KPIs to support the good faith of doing with the employees, not the bad things. Three, the KPIs should be based around the needs of key stakeholders, whether they are investors, whether they are employees, whether they are suppliers, whether they are customers. We need the KPIs to be based around the needs of key result areas. We want them to be simple. We need them to be cost effective. We don't want a KPI system that measures 100 things that are not needed. We don't want a KPI system that keeps the employees busy for 15 hours a month without actually adding value to the organization. They must be reported on demand, and must be by one individual to verify the performance of that individual or that department. When we say owned by one individual, this individual can be either a person or it can be a department. When we set KPIs, the KPIs can measure the accounting and finance team operations, the speed of processing invoices, the accuracy of the account payable, the accuracy of the payroll processing. That's one of the things. Second, it can measure financial areas of the company. The financial areas of the company can be liquidity, profitability, solvency, how actively we are managing the finances of the company, and third, business units. In the first dimension of 6 dimensions, we will learn on how to place proper KPIs. We'll learn on how to differentiate between operational KPIs and financial KPIs. We will learn on the problems that we have in our KPIs and how to reinvent our KPI measurement system. Now we're going to move to the second. So this is an example of KPIs. We see customers, suppliers, employees, and auditors. All those are stakeholders with which the accounting and finance people deal. AR versus customers. How are we performing? AP versus suppliers. How are we performing? Payroll versus employees. How are we performing? Lenders. When I say lenders, here we should have, for example, banks. Okay. This is an example of operational performance, and then we can have financial KPIs such as liquidity, solvency, again, profitability. So the first thing that accounting and finance people must have is that accounting and finance people must design proper KPIs, simple, easy to measure, accountable, easy to extract, result to a key result area, and other features of KPIs. The second dimension is knowledge, managing the knowledge of the staff. So one, we have a KPI system that measures everything. Two, we need to focus on the base. Happy employees equal, can someone continue? Happy employees equal good results. We need to have happy, well knowledgeable employees to achieve good results. About knowledge sharing. The previous CEO of Ford Motor Company, Mark Fies, said, culture eats strategy for breakfast. Do you agree with this saying? Culture eats strategy for breakfast. We place the best strategy, but then the employees are not motivated enough. We place the best strategy, but then the employees are not on board. We place the best strategy, but then the employees do not commit. So, one, we need to create a culture. What's the relationship between culture and knowledge sharing? When we are looking at knowledge sharing, usually we do have two types of companies or two types of businesses. We have the anti-sharing businesses. Those are the employees that work in silos. Those are companies that promote the culture of silos. Those are the companies that promote the culture of you work by yourself, do not share, because if you share, they will win and I will lose. When we say creating a culture of knowledge sharing, we are looking at collaboration. We are looking at win-win. We are looking at your success equal our department's success. That's something very important that we would work on to achieve the second dimension. How can we achieve a culture of knowledge sharing? We have someone who's very good in IFRS. We have someone who is very good in reconciliation. We have someone who is very good in preparation of financial statements. We have someone who is very good in budgeting. How to create a culture of knowledge sharing? One, you need to show people the personal direct benefit. If you teach someone, you will be able to get promoted. If you teach someone, you will have enough free time on your hand to learn something new. If you teach someone, they will push you up. Their success is equal to your success. It doesn't mean that their success, they will replace you. When they know, you will be able to learn something new. Two, show them reward and recognition. Nominate a coach. Nominate the top coach of the year. Nominate the top mentor of the year. This way, you will create reward and recognition for the people who are sharing knowledge. Three, identify knowledge champions. For example, Abdullah, you are champion of IFRS. You will be the focal point for any IFRS question. Doris, you are the champion of financial reporting. If any person needs to know how to report a certain transaction, Doris will be the person. Maruf, you are the champion of budgeting. You know how the budgeting process from the beginning till the end happens. If anyone has the question about budgeting, Maruf is the right person to ask. Four, allow for mistakes to happen. When you are sharing knowledge, the system is not bulletproof. Be flexible with the mistakes. Five, make knowledge as a job requirement, not something factual that comes and goes. Make knowledge as something that is required from every person. Whenever you learn something, you provide it to someone else. For example, if someone goes for a training and attend a training outside the company, the person who comes back to the company has the responsibility to train his colleagues. If person, for example, obtained a professional qualification, this person has to conduct one day or one afternoon session to teach other participants or other people within his company about the learnings that he got from this qualification. Six, educate employees on what knowledge is valuable and knowledge is valuable. Seven, implement technology for knowledge sharing. In the next slides, we will see that when you are sharing knowledge, there are two different ways to share knowledge. The first way is known through codification. The second way is known through personalization. In codification, when you learn something, you document it. When you learn something, you put it in a shared file. When you learn something, you give it a code. In personalization, we have champions who know very well about a certain topic, so people come to those people and ask them, Colleagues visit other colleagues to ask them. So codification is people to documents, whereas personalization is people to people. Then we have codification is similarity based. You can file everything in relation to KPIs in one folder. You can file everything related to processes in another folder. You can file everything related to auditing in a third folder. Everything related to treasury in a fifth. Everything related to inventory management in a sixth. Everything related to accounts receivable and credit policies. Under personalization is goal oriented. What do you need to know? You need to know about this, visit this guy. You need to know about that, Abdullah is the best person for you. 3, codification is filed where specialization in certain field is documented in a certain file, whereas under personalization, we have customized solutions. And then codification usually requires a system support, requires an ERP to support the documentation. It can range from simple Word documents in folders up to knowledge sharing softwares, whereas personalization is basically held by individuals. You do not need a heavy system support. The right physical environment. Do not underestimate the right physical environment. Do not underestimate having people in the right physical space with a clean desk policy. People to have natural light coming inside the offices. Do not underestimate creative offices. Google and other companies keep on bragging about their offices. Yes, it pays off. When your people are sitting in natural light, when the people are having proper space, when the people are having open space, when people are having some sort of healthy treats at the office, this usually pays off. Not to mention the appreciation and reward. When you provide the people the right appreciation and reward, they are expected to be happier, more motivated, and they are expected to contribute more to the finance and accounting team. Now we go to the third dimension, which is process improvement. 1, we have set all the proper KPIs. 2, we created proper knowledge sharing for our employees, and we try to motivate our employees. 3, process improvement. When we say process approach, a process approach means that we have a process that we stick to. It means that if any one of you leaves, if for example Ahmed leaves, when Ahmed leaves, the life does not stop. In a process approach, everything has to be managed through processes, not departments, not people, not products. When there are proper processes that are properly documented and properly shared, we will expect that people will operate based on same standards. We will understand that people will follow the same steps and everything is recorded properly. What is the advantage of process mapping? 1, when you are mapping a process, it's not an individual work. Mapping a process usually happens through team involvement. When you are mapping a process, you basically engage everyone in the team of placing down the process. When one is involved, their morale goes up. 2, when you see everything, when you see the big picture, you will be able to pinpoint vague problems. You will be able to pinpoint duplicated steps. You will be able to pinpoint unnecessary steps. You will be able to pinpoint non-value adding steps. You'll be able to pinpoint things that can be automated. So seeing everything in terms of process, you'll be able to improve in terms of consolidation, consolidating activities, in terms of simplification. Okay, seeing the big picture, obviously, compliance and auditing. When we know the process, when we ask all the employees to stick to the process, we can basically verify if they are complying and we'll be able to audit the process. Then we'll trim unnecessary steps. Having a process, seeing the big picture, when we pinpoint the vague problems, we will be able to cut down on time, we'll be able to cut down on waste, we'll be able to eliminate non-value added steps. Everyone in the company does the things in the same way. When people are coming in, we can train them on the process. So we will trim unnecessary steps. New employee training. Every person who's joining the company will get trained based on the processes that are well documented. Even you don't need to train them. When we have a process in place, you can tell the new employees, that's the process, read it. If you have any questions, get back to me. If an employee is not complying with the process, we can come back to the process and we can show them the process. When the internal audit come, they will be able to audit our process and see if our process is able to detect and prevent errors and other misstatements in the company. And last, you can circulate the best practice. Why? Because when you see the big picture, when you create the new process, when you trim the unnecessary steps, so one, we see the big picture, two, we trim the unnecessary steps, so now we are left with best practices that are given to all employees and to new employees. Now, if you would ask me what are the best softwares in order to write down or in order to draw down some of the processes, we do have the Visio. Visio is one of the softwares that are used. You can download Visio and use it in order to draw down processes. Another software that can be used is called Bonita Soft. So we have Visio. Visio is one of the softwares. Then we have Bonita Soft. That's another software that can be used in order to draw down processes, or you can use another software called EDRO-Max. So EDRO-Max is a third type of software that can be used for drawing down softwares. As we said, once we see the big picture, once we see the input, the process, the steps, and the output, we will be left with this decision. What to do with all those? What we can do is that we can rearrange the steps in order to minimize the time, or in order to remove bottlenecks. We can eliminate some non-value added steps. We can combine some steps that are done by more than one person. We can automate whatever is manually done. We can reduce the cycle time, or we can simplify any step or any process. With all those reductions, you can expect reduction of time and cost and higher stakeholder satisfaction. When you are able to generate reports faster, when you are able to provide reports error-free, you will be able to increase value to the company and shareholders. The fourth dimension is about innovation. So the first dimension is placing KPIs for the business. The second dimension is about working on the knowledge and happiness of the employees. The third dimension, now we have well-trained, we have well-equipped, we have happy employees that can improve my processes. Now I can give my employees some sort of choice to implement innovation. I have well-trained employees that have good processes and they can implement innovation. Implementing innovation usually in finance team is becoming a big thing. Why? If you look based on the study that has been prepared by the Institute of Management Accountants, they found out that for now, still 61.4% of small firms are still relying on spreadsheets. 73.7% of companies, large firms, are still relying on spreadsheets. And on average, 66.4% of companies are relying on spreadsheets. And this is alarming. Reliance on spreadsheets with the existence of ERP systems is very time consuming. Accordingly, implementing ERP softwares, implementing tools that automate the day-to-day work, automating the procure to pay, automating the order to cash process, automating the record to report would minimize gap and save time and effort. Based on the IMA's report, they also found that there are certain specific processes that require most of time. These processes are candidates to consider for automation. One, bank reconciliations. Bank reconciliations is requiring the most time and effort in manual form. Variance analysis, analyzing variances, follow up on the variance analysis, justification is still manual, is still based on spreadsheets, and is taking a lot of time from people. Bank and credit card reconciliations is another one, and journal entry creation, manual journal entry creation is taking a lot of time. Now, if you want to implement some sort of automation, different processes can be automated. This is based on a report with Deloitte, where they mentioned which processes can be automated. The order to cash, the process that starts with the customer placing the order till receiving cash, how things can be automated from internet ordering to intelligent scanning, online credit check, automated revenues and receivable recording, how things can be done. Purchase to pay, when the company, or another wording of purchase to pay can be procure to pay, how things can be automated. Now about the employees, hire to retire. then we can have something to report, or another word is record to report, or general things that can be actually automated. Those, as I mentioned, are the basic or the main areas that can be automated to minimize the gap, to minimize the time, and to minimize the effort of employees. So the first dimension, as we mentioned, is setting KPIs. The second dimension is creating a strong team. 3, creating strong processes. 4, implementing automation. Now 5, stakeholder satisfaction. On a daily basis, the accounting and finance team deals with internal and external stakeholders. Internally, you deal with employees in relation to payroll. Managers, budgeting and control. Board of directors, budgeting, financial reporting and analysis. Shareholders, financial reporting and analysis. Externally, you deal with the public, with the potential investors. We have the investor relation team who's always dealing with the prospective investors. We have the banks. We deal with the banks in terms of treasury, bank reconciliation, some derivatives, loans, interest rates. You deal with suppliers, invoicing and payment to the suppliers. You deal with the customers, billing and collecting of receivables. You deal with the auditors toward the end of the year, at an interim period, at the end of the quarters that you are listed. You deal with regulators, taxation, and sometimes you deal with donors. If you receive some donation from the USAID, if you receive some donation from the International Monetary Fund, you will have some reporting requirements. How do we make sure that we are providing relevant information to all those stakeholders? How do we make sure that those stakeholders are happy from the information we are providing them? How do we make sure that the level of details, the frequency, the content, the quality of the reports, the quality of dealing that you are having with those parties is what they want or not? We need to look at every different stakeholders and see how to deal with them. We have stakeholders that have high influence and stakeholders that have low influence. We have stakeholders that have high influence and low interest, and then some stakeholders that have high influence and high interest. How to deal with every one of them? For stakeholders that have high influence and low interest, those we keep them satisfied. But for the stakeholders that have high influence and high interest, those are the key players, and those are the people that we need to make sure that we are providing them whatever they need in a timely basis, on an accurate basis, for them to be able to make decisions. We need to provide them with the reasonable and needed data so that they make economic day-to-day decisions. Third, low interest, low influence, we need to spend minimal effort. Do not ask those people what they want. They have low interest and low influence on us. Then we have low influence, high interest. Those people, we keep them informed. Okay? Now what to do with each one of those? We can send them surveys, and the survey can ask them attributes related to the report. What about the quality of my report? What about the relevance? Is my report properly designed? Is my report reliable? Is my report consistent? If you get any low score, for example, a 2/5, this means that you have a problem in your reports. Then you can ask them about the quality of your service. Is my service timely? Is my service accurate? Am I handling your complaint accurately? When the suppliers are calling to ask about a certain invoice, are we responding to those people in the right manner? Are we resolving the disputes properly? Do we have courtesy in the way that we serve the counterparties? Are we helpful or not? The last thing that we want is an account receivable department that is not helpful. The last thing that we want is an account receivable that do not issue timely invoices. What do surveys help you do? The surveys help you see from an external perspective, from the perspective of other stakeholders, if you are a 5/5 or if you are a 1/5. If you are a 1/5 in any of one of those areas, then you need to reconsider your processes. You need to reconsider if your staff is well trained. You need to reconsider if you are delivering value to the counterparties or not. The sixth standard is cost reduction. If I have a proper KPI measurement system, to measure my performance. If I have happy, knowledgeable employees who are willing to share their knowledge. If I have in dimension 3 proper processes that are fat-free, processes that are promoting the best practices. If I am implementing innovation properly, if I have stakeholders that are well satisfied, believe me that cost cutting and cost reduction can come by itself. You do not start by cutting costs without having proper processes. You start first by placing KPIs. Who reminds me what is the second dimension? So the first dimension is setting KPIs. What is the second dimension? Who do I need to achieve all the other dimensions? Who do I need in order to achieve all the other dimensions? So one, set proper KPIs. Exactly, Maruf. I need employees. I need well-motivated employees that have good knowledge and that they share this knowledge. Knowledgeable and happy employees. And in the second dimension, we teach you on how to share knowledge, how you make the accounting and finance team share knowledge, and how to keep them happy. Now I have proper KPIs to measure all the dimensions. I have knowledgeable and happy employees. The third dimension is about having proper internal processes. So 3, it's about process re-engineering. Dimension number 4 is about implementing innovation and technology. Process number 5 is keeping the stakeholders satisfied. And then in dimension 6, money and savings will come. This is the 6 dimensions. 1, placing KPIs. 2, having knowledgeable, happy employees. 3, process reengineering. 4, implementing innovation. 5, stakeholders. And 6, money and savings. Is money and savings important? Sure. Deloitte performed a survey in December 2007, and they found out that 86% of the global respondents, 86% of global companies are trying to achieve cost reduction and undertake cost reduction initiatives. But what is the result? All the people were trying to achieve cost reduction, and believe me, all those companies didn't want to reduce 50% of their cost. The target was only reduction of 10%. Target was less than 10%. Almost half of the organizations surveyed indicated relatively low cost reduction targets. They don't want to reduce 25 and 30%, only 10%. But guess what? 63% of the companies failed to achieve those cost reduction. Why? Because they go directly to the reduction of costs without having proper KPIs, without having the proper team, without doing process engineering, without having proper innovation in place, and without making sure that their internal and external customers are satisfied. Low targets, but high failure rates. How to achieve this? If we do have this, if you want to achieve cost reduction, you can achieve cost reduction based on 2 fronts. The first front is strategical cost reduction, and the second front is tactical. Under the strategical, you can change the business configuration, you can outsource some of the operations, you can implement shared service centers. Those are strategical levels. On the tactical levels, you can streamline the accounting and finance operations, you can do some process improvement, you can reduce spending externally, you can streamline the processes. As we mentioned, those are tactical tools. But not every company should follow the same cost reduction methodology. Why? Because it heavily depends on your status. It heavily depends on your competitive situation. If you are a distressed company, your target will be to minimize cost and achieve liquidity. You need to have enough current assets to settle the current liabilities. But if you are a company that is growing steadily, your cost reduction must not be your top priority. If you are a company who's growing steadily, your number one focus should be on retaining talent, and number two should be on growth. Cost reduction comes in number 3. There is a mistake for companies that let's save on costs. Let's save on cost. All companies are trying to save on cost, but it's not always the solution. Many times, trying to grow and focusing on talent would pay off and add value to the shareholder more than focusing on cost reduction. If you are a company positioned for growth, which means a company recovering from a recession, you are adjusting to demand levels, you have growth concerns, yes, cost will be your number 1 priority, growth will be your number 2 high priority, 3 talent, and 4 liquidity. This model has been designed by experts to tell each company if cost reduction should be their priority or not. My advice to you is to look, where do you fall? What is your competitive situation? Are you a distressed company? Are you striving in uncertainty? Are you positioned for growth, or you are growing steadily? Based on your positioning, on whether you are distressed, striving for uncertainty, positioned for growth, or growing steadily, you can decide what is your priority. Is your priority talent and people? Is your priority achieving and maintaining liquidity? Is it growth, or is it cost reduction? When you decide that cost reduction is your priority, then you should follow a 10-step model. The 10-step model starts by analyzing your current cost structure, benchmarking the best practices, assessing cost reduction opportunities, developing opportunities, and then you can test, adjust the initiatives, prioritize, and test the initiatives. Later on, step number 6 is developing a plan for each initiative, developing an integrated plan, organizing a project management office to make sure whether we are going on deadlines, whether we are going on track, controlling the initiatives, communication between the multiple stakeholders. Then we have implementation of the program and assessing efficiency. And that's the 6th dimension, which is achieving cost saving. So ladies and gentlemen, the 6 dimensions of effective accounting and finance teams are not about recording debit and credit. The 6 dimensions of effective accounting and finance teams are not proper recording of payables, receivables, reconciliation, treasury, fixed asset measurement, or payroll. The 6 dimensions of accounting and finance team is about looking on the big picture of accounting and finance. Do we have KPIs that measure the business? That's 1. Is our team properly structured? Does our team share knowledge? What's the culture? Are they happy or not? That's number 2. 3, do we have proper processes in accounting and finance? Do our processes need process reengineering? 4, did we leverage on innovation to the maximum potential? Yes or no? 5, are our internal and external stakeholders satisfied? Yes or no? Are our suppliers, customers, shareholders, potential investors, bankers, auditors, tax regulators, are they satisfied from the dealings with them? Are we being timely? Are we being courteous? Are we doing the right things in the right way and the right time? That's dimension number 5. And dimension number 6 is cost reduction from a tactical and strategical perspective. That's it. I want to thank you for your attendance. And now you have around 10 to 20 minutes to ask any questions you have regarding this topic. Please note that this program will be held in Dubai in the 3rd week of April. This year, in year 2019, the program of 6 dimensions of effective accounting and finance team will be conducted twice in Dubai. The first time it will be conducted in the week of 21 till 25 April, and the second time it will be conducted in the week of 13 till 17 October. So if you wish to have a better understanding on the 6 dimensions, if you wish to have a better understanding on how to put down KPIs and have practical workshop on preparing accounting and finance KPIs, having practical exposure on knowledge sharing, process engineering, innovation, sending service to stakeholders, and cost reduction, please join us in one of the 2 dates that are set, 21 to 25 April or 13 till 17 October. Now I leave the floor for you for any questions. Does anyone have questions? Abdullah, I can see Mr. Abdullah Anazi, I can see Ahmed, Aisha, Amir, Bushra, Doris, Maruf, Muruj, Murtala, Uhud, Sumaya. Anyone of you who has a question in terms of the 6 dimensions? Okay, so if you don't have any questions, then I would like to thank you for your attendance. I would like to thank you for, that's Doris typing. So we still have like 5 minutes. If any one of you has any, can you send us slides? Okay, I can see you. Thank you. I can send you the slides. I appreciate if you can share your emails. We do have your emails. We will send the slides to the emails on which you actually registered. Aisha, I can see you. Doris, Amir, thanks a lot, all of you, for attendance. I do have your emails. We will send you the slides. Sumaya, thank you. We will send you the slides to your emails for which you registered in this for this webinar. Remember, the 6th dimension is more of a strategical, tactical management of the accounting and finance team to achieve effectiveness with the team. It's not about accounting. It's not about financial concepts. It's a high level strategical and tactical approach to manage the accounting and finance team. Okay, since you don't have any questions anymore, I would like to thank each and every one of you for your attendance in this webinar. This webinar will be saved on Meirc's website, and you can watch it. You can watch the webinar later on. We do have your emails, as I mentioned, and we will send you the results of this webinar and the slides. Thanks a lot for your attendance again. Thanks for each and every one of you. And please, we invite you to watch other webinars in the future. Thank you.
Meirc.com